Hi, everybody. My name is Andrew Pallas. Welcome to another episode of the Retire on Purpose podcast. Today, we're joined by my co-host and colleague, Cory Laird, another CFP in the office here, Certified Financial Planner.
Hey, guys.
Today, we're going to be talking about charitable giving.
Oh, cool. Are you charitably inclined?
I'm charitably inclined, but this moment in time, I give more of my time than I do my Monday. So,
Okay, I love that, actually. Yeah. It's too bad that's not tax deductible.
yeah, I'm sure it is it's upstairs, but
Yeah.
tax deductible.
So, what particular topics do you want to discuss in terms of charitable giving?
Yeah, I think a timely topic might be, some of the changes from the BBB, right?
Okay.
So there was some changes there in terms of how much I can deduct off my taxes for charitable giving without itemizing my taxes, right?
Okay. Yep.
And then maybe some strategies for an individual that, let's say, they like to give to a charity every year, maybe multiple charities.
Okay.
So,
All right. So let's talk about the OBBB.
yes.
I think they did change the name at the last second there, or at least the acronyms.
Yeah.
But the OBBB bill did change what you could deduct for charitable giving without itemizing. So if you're not familiar with standard deduction versus itemizing, that's more of a topic for another discussion. But for the most part, even if you didn't itemize, you would still be able to deduct charitable giving. The old rules were $600, I believe, for a married couple.
Yes.
300 for individuals, and they upped that to 1,000 for individuals, 2,000 for married couples. So that basically means that you can take this standard deduction and you could get that $2,000 if you're married.
Deduction.
Deduction. Yeah. Yeah.
Very good.
So that's the big change there.
Okay.
I actually do want to point out something about charitable giving for the most part, or the overlay here is the charitable giving and the strategies around it, which there are several strategies around it, is to help reduce the cost of giving by saving you money on the taxes.
Okay.
And that's where a lot of these strategies, which we'll go over one today, I'm assuming, that's where a lot of the strategies come from. But it's important to know that if you give $1 to charity, and even if you're saving 30 cents for taxes, you're still out 70 cents net.
Yeah, and again, that goes back to being inclined to give to charity, right? You know you're going to be out that money, but it's for a greater purpose.
Yeah, you can't, well, for the most part, you can't make money by giving to charity, right? You give $1 and you get $1.50 back. That's that sounds like fraud.
Sounds like an investment, but
yeah, that sounds more like investment.
Okay, so that was one of the changes to the OBBB.
Yep.
Ken, want to get the acronym right? I'm sure we're accurate there.
I think financial advisors, they love their acronyms.
Oh, we do. We do. Love our acronyms, love our lingo. So try to keep it high level there. But all right, so let's move on to the strategy that we were talking about earlier, which donor advised fund.
Yes. Yeah. So donor advised fund is a type of account.
Yes.
Just like a IRA account or Roth account or 401k, 529s. A donor advised fund is just a type of account out there.
Right. Yeah. But it's an account for a specific purpose, which is
donor being the key word. It's for charitable giving. Yeah, that's
so as the donor, let's say that I'm an individual that I like to give 5,000 a year to multiple charities. It doesn't have to be the same one. What's a strategy that we can utilize with the donor advised fund to, I guess, maximize, like you said, the cost of giving to charity through tax savings?
What do you mean? Give me an example.
So again, I'm giving 5,000 a year to that charity.
Yep.
We've talked about it before. We've talked about it with many clients before as well, is bunching that gift instead of doing it on a annual basis for the next 10 years.
Yeah.
Let's say that we accelerate that and we choose to do 50,000 this year.
Okay, so let's talk about bunching. You said that word.
Yes.
Yeah. So let's say that let's say you get $5,000 a year, and the deduction currently after the OBB changes is $2,000.
Right.
So you get your $2,000 deduction, and assuming you don't itemize, the extra $3,000 up to the five that in this example you do, the extra $3,000 that you do is not a deduction at all. So it's not a waste. That's rough. The charity is still being improved.
I like what you said earlier, cost of giving. Yeah, I think that's a good point.
But the $3,000 is not, in this example, is not used for tax deduction or helping with taxes here. So, the question is instead of giving 5,000 one year, 5,000 another year, and continuously having, in this example, $3,000 go to quote waste, instead, let's bunch it, let's the next 5-10 years and give one big giant deduction in one year. and it allows you to deduct a full amount rather than kind of letting it go
Okay.
off and not get a deduction for the extra amount.
So when I give that $50,000 to the donor advised fund,
Yeah.
I can then turn around and deduct 50,000 from my taxes.
Well, excuse me, it works just like an itemized deduction. So if your itemized deduction, you would itemize charitable giving, mortgage interest if you have one, state and local taxes, property taxes, and state taxes, for example. You would itemize that. You would add all those up. And normally, you're taking this. Most people are taking the standard deduction because of how large the standard deduction is.
Right.
But if you're able to give a large gift to charity, can you get over the standard deduction with itemized deductions? And you would take that into a strategy when you're thinking about bunching for charitable giving.
You definitely would want to check with your tax preparer, your accountant, right? Because there are certain caveats to what type of gift you're giving to that donor advised fund, right?
There are certain limitations of how much you can give based on what your income is. You know, if you have $100,000 income, you can give 500,000 away, but you can't deduct $500,000. You can only deduct a certain percent of your income each year. And they vary depending on what you're giving away, cash, stocks, things of that nature. So you definitely need to check with your advisor on the rules and your tax professional, whoever that may be.
Okay. So let's talk about some positives of the donor advised fund. Obviously, yes, you get the tax savings by doing it. What are some other features that people should be aware of when it comes to the donor advised fund?
I think a big question is if I'm going to give a big cash, a big amount to this account, there's an opportunity cost of it not being invested and growing for the long term. But the good news is that you can, even when the money goes into the donor advised fund account, you can invest it as well.
Okay.
Stocks, bonds, things of that nature. So you can kind of take that opportunity cost and wipe it because you can still invest that money.
And so as the donor giving that money, am I the only one that can kind of control where that charity of my choice, right? Because every year it doesn't have to be the same exact charity.
Right. So, when you create an account, you put money into the donor advised fund, you are then able to give grants to charities of your choosing. And so that's it's very flexible in that you can effectively, you can put it all into the one account in 1 year, and then over the next year, 2 years, 10 years, whatever, 50 years, the account goes forever, and you can dole out the money whenever to any charity, 501(c)(3) charity of your choice.
Okay. And let's say that I want to pass this on to my kids in the form of them being the donor at that point.
Yeah. So you can have beneficiaries on this account, donor advised fund. It's very important to know that it remains a donor advised fund account. If you put your kids as beneficiaries on them, they just become the trustee is probably the best example.
Sure.
The trustee of that money, and they then can dole the money out to 501(c) charities of their choice as well. But it must go to a charity. I think one of the biggest downsides is it's pre-gift.
Right.
That's how the taxes work. That's how the tax deduction
It's a complete gift.
Yeah, it's a complete gift. Yeah. So
you lose control over, being able to take that money out and, use it for
a car,
vacation, home renovations, whatever it is.
Yeah.
So I mean, again, that goes back to you have a mindset of wanting to give it to charity. You've earmarked a certain amount that you want to do that with, and you know that once you give it to the donor advised fund, it's out of your estate, it's out of your control.
Right. And I've seen some clients put money into these accounts not to dole out money on an annual basis, but to, in their mind, this money is going to charities when I pass away. And so it's a part of their estate planning tools. Some people have 5% gifting or 10% gifting in their wills. So instead of that, which is not a tax deduction, they want that tax deduction now by putting it into the donor advised fund. And as the beneficiaries if and when they pass away, those clients pass away, they'll actually list charities when they pass away, that the money then doles out to those charities once they pass away.
That's an interesting estate plan.
Yeah, no, it's a estate plan that allows you to get some taxes now for your wishes later on.
Fantastic.
I think the most important thing is that there are several charity strategies. There's the qualified charitable distribution. There's CRATs, excuse me. the
Correct.
opportunity zones, things of that nature. You would want to make sure that you're talking to your tax professional and your financial advisor to know which type of charitable strategy, if that is inclined what you want to do, what charitable strategy actually works best for you.
So I guess you'd say donor advised fund's not right for everybody.
It's not. It really isn't. It really has a niche. Yeah.
Awesome. Well, this kind of wraps up our Retire on Purpose podcast for this episode. If you like what we had to say or if you found it informational, feel free to like, comment, share, and we'll see you next time.
Thanks, guys.